The morning report for the 16th of December 2009. I've been talking about for some time retail debt and debt levels and how the economy and the global financial crisis is going to affect the everyday man. Now, we're the last ones to be affected by the global crisis. The big companies have recovered and gained income and obviously recapitalised themselves. But now the average Australian or the average American is going to be hit with increasing interest rates and high levels of debt. We started to see that play out last night with JP Morgan's and Chase coming out with increasing credit card delinquencies. I think you'll see more delinquencies across the lending sector, especially in the car loans and personal loans over the coming months, and certainly into the housing sector over the next 12 months or so as interest rates continue to rise. Now, this will be a concern, and certainly what we are keeping an eye on is retail spending. Now, expect retail spending for December, for obvious reasons, to be quite strong, but looking through January, February and March is what we really want to see is how the retail spending is going and how that's going to affect those sectors. Now, last night on the news of credit card delinquencies moving up slightly, we saw the Dow Jones take a bit of a pull back as America's retail spending is a key to the recovery of the whole global financial crisis. Dow Jones was down 0.5, S&P 500 down 0.6, and the Nasdaq down 0.5. The FTSE also lost 0.6 to close at 5,286 points. Our market gained 0.4 yesterday, but it's going to lose that again this morning, and we'll end up around 4,640 points by the close of trade today. Now, this is obviously, again, keeping a focus on that retail spending, which is going to be the key going for the next 6 months. If we see some good growth in retail spending, we can expect to see the US economy recover quickly. However, the danger there is quite simple. Inflation is running a little bit high and interest rates are moving up. What we're worried about here back in Australia is the slowdown of the building industry and the slowdown of the housing industry, more importantly. Now, we'll keep a close eye on that in the coming months, but certainly don't put this off opportunities because there's plenty of opportunities out there in the market right now to pick up big fat yields on big blue chip stocks. I put out last week my top 10 picks for yields. Take a look at that. If you haven't seen it, drop me a note and I'll send it through to you again. But certainly, if you've got money sitting in cash and term deposits, you want to have a read of that because you can get a much better return and a little bit of growth out of it as well. For more information, go to our website at growyourwealth.com.au.